Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York on Monday, the 29th day of September 2014, and this is the daily report for gold and silver. We do have both gold and silver trading lower, platinum and palladium higher on the day. First to gold, as you can see, current print on the screen is 1216.40. 1215.60 is cash price, down about 360 on the day with a low of 1215, so just off of the lows, and a high of 1223. Silver also trading lower, actually off almost a full percent, down 17 cents today, 17.48. That is the current print on the screen with a low of 17.38 and a high of 17.64. Traders, interesting start to the week as we take a look at a couple of the markets that do affect the precious metals market. First of all, Dow Jones Industrial Average, it's off about 41 points, 17,071 is the current print. Up here we have the E-mini 500, and the S&P 500, of course, is also trading lower, 1977.80. That puts it off roughly 5 points on the day. We have the dollar slightly lower, so we have a lower dollar, lower stock market, and we have lower precious metals, including silver, the industrial metal, which I would imagine will go in unison with the equities markets, of course, having the industrial component. But at the same time, we are seeing some continued pressure in precious metals in light of the fact that the markets which have been pulling them down by moving up are lower. We have a tandem effect, so pretty much across the board we have Dow Jones, NASDAQ, S&P, dollar. The only thing that I'm looking at that is up today right now is crude oil, platinum, and palladium. First to gold. Now, we're looking at a simple daily chart. When we look at this chart, we can see we've had a pretty much a one-way ticket as this market breaks through, of course, first of all, the long-standing support line, and that's really when we saw dramatic drops in the market. Now, the market has hit a low, I believe, roughly of 1206 or 1207. We've got it marked here at 1205, and that's because there's an ask-bid spread, and I'm always taking the lower of the two numbers. So a 1207, of course, would be a 1206 in that area in terms of the low. Now, I've also added a couple of fib retracements. That's this line and this line here. And really what I'm looking at is a fib retracement from different highs, coming down from the high of 1342 and also coming down from the high of 1297 to create these different fib levels. Right now, I am looking at resistance currently at about 1227 to 1237. That's the band of resistance, and that's just based upon a 23% retracement of these moves down. Now, if we take a look at this large retracement, which is of the rally which began end of 2013 into 2014, and we look at the 76% retracement level, that comes in at around 1230. So I really believe that we've got this entire band here, a $10 band, between 1237 and 1227, in which we have some pretty strong resistance. We can also see this bottom right in here, and this bottom right in here falls right above, or right at, I should say, this upper level band. Let's in fact go ahead and draw a line straight across. I'll try to get it as straight as I can. And as you can see, it falls just above this particular point, or the 23% retracement of the move from 1242 down to about 1205. So with that in mind, what are we looking at? My sense is that after seeing this market really sell off from these dramatic areas, this being around 1320, this being around 1300, sells down, breaks below 13, really goes to almost 1200, and that's what we were looking at, whether or not it could make it to 1200. We've made it just shy of that. Now, it's really not that far off that mark, currently trading, as I said, at about 12.15 and change. And so my sense is that what we'll probably see, or should see, I would expect in terms of a model right now, is some sort of a bounce. And that bounce could take us anywhere between 12.27 and 12.37. At that point, based upon what we have seen in recent activity, I would look for this market to move back south, possibly testing the low of 1180. That is absolutely still in the cards. Now, the question should be, well, at what point would we deem this to move back into kind of a bullish scenario? We are in a bear market, there's no doubt about that, but some sort of a bullish scenario. And to really say anything that would make me believe that we had some upside potential, we really need to break above this particular low right in here, which comes in at, if this is 1237, roughly at 1240. So if the market really found some steam and from there was able to trade above and on a closing basis, most importantly, on a closing basis begin to close above 1240, then, well, that would be a different ballgame, because if it would start to form a base and then trade above this particular area, I could see it possibly really moving as high as maybe 1300, anywhere between that, because we should get some resistance at this peak right here. However, as it stands right now and the way that we're looking at the market, what I really believe we will see over the next, call it week to week and a half, let me change the color, is we've got this large spike down. I believe we'll get a spike up that will stall somewhere between 27 and 37, and then I believe we'll see this market move back down, possibly to test these lows at 1180. So traders, what about silver? And really to get an idea of where we stand in terms of a bigger picture, I've really gone ahead and compressed this chart. And we talked about this a little bit on Friday. And if we look at this one area, you can see that this particular price point, and this particular price point is pretty much where we are currently at in silver, did provide a little bit of support, and that support came just prior to the market really spiking and hitting $50 per ounce, this back in 2010, when we saw gold really challenge some higher pricing. Of course, they moved independently, but at the same time, you went back, this being the second time in history we have hit this particular price point. Now, this market is really, it's had its triple top. Each top has really had a lower low. We had some support that came in, and the support, I believe, came in at around 1880. Of course, once that broke through, we just barreled on below 18, now sitting roughly midpoint in the 17 areas. This line here comes from $17 to about $17.20. Traders, if we're going to find support, in the market, that's the point I'm going to look for, because if it does not, you have this particular top right in here. And again, let me try to line this up. And that doesn't really come in till about $16 per ounce. And in terms of a technical basis, meaning where this market is traded at, you've got this one little point here that falls in just below it, maybe at 1650. But there's really, on a technical basis again, there's really not much support in this area in this particular price point. So it is really critical. If silver can hold this, it tells us one thing. If it cannot, it's going to, I believe, move into the $16 area, and that would happen along with gold moving into the below 1200 to 1180 for a bottom. And that's where I think we might possibly find some bottoms within the precious metals market, specifically gold and silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.